morning, everybody. I'm Kerry Hoops with German American State Bank, Chief Credit Officer, and I have the pleasure to be up here today with actually my uncle, Marlin Bolen, from down in the Nashville, Tennessee area. Works with RFD TV, so many of you are probably familiar with his broadcast. And again, of course, one of our top lenders here, Jeremey Doetch from Doetch Farms up here near Poplar Grove. So we're out here on their farm today. Gonna watch some harvest some soybeans, some seed soybeans, and again we also have the pleasure of having Georgy from Allendale, principal there, and Greg McBride, and again the Doetch family has the pleasure of working with them, and Marlin's known Steve and Greg for quite some time too, and works with them on the marketing side on his broadcast. So again, that's who's here today, and again, I'll let Marlin kind of started out. He's used to interviewing people and on his show, and again, we just want to bring a little value to the table here about markets and where they're at presently. Give you guys some ideas on current conditions with the fall harvest, what you might do. Talk about other outside variables that might be happening here that might affect the market, and maybe where things might go in the future. So I'll let these experts talk and tell us a little bit about where things are going. So listen and learn.
All right, so let's talk about things as they are this year. It's a challenging year. It looks like in this part of the country, you guys have got some really good crops up here. I have to admit, I drove in from Tennessee up here to northern Illinois, and this is some of the best looking stuff I've run across. I mean, gosh, we came through Evansville and headed north from there, and I'd say the central part of Illinois is just phenomenal. Everybody's going strong down that area there for harvest, but I guess with yields looking to be pretty good this year and the market the way it is, whoever dreamed we'd have $7 corn in the middle of harvest?
It's crazy.
How do you talk with your clients about protecting that? Because this is a very unusual situation right now. I've never seen anything like it. I look back, I think when I got out of farming, I sold corn for like $1.85. What can you do to kind of set a floor on your market right now? And you got to look ahead to next year. I'm guessing a lot of guys are going to be probably prepaying before the end of the year. Yeah. What if they've already sold everything they can sell this year? I mean, are options popular now, or what's the consensus right now?
Yeah, there's a lot of way to look at this. You're absolutely right. When you take a look at the volatility these markets have, it's crazy. I've never seen anything like it. We get some very volatile times, but we get volatility, and that volatility typically is met with just the futures price. Well, the cash price is good too. Basis levels very, very strong, still strong through harvest, as you mentioned. Yep. And they're probably going to remain that way. So we have a lot of uncertainty, but that means volatility, right? So when you take a look at what do? You've got some profit right now. You've got a lot of profit in certain areas. And it's to take advantage of that, make some sales, or protect yourself, as you mentioned, with options. To get into futures right now, you've got a lot of risk. You're going to take that daily price risk. We see what happens specifically for wheat, how fast the wheat can move. And do you have the amount in order to stay in a market when you're dealing with futures? But options, a little bit different animal. You can come out, where your risk is. You simply buy a put to protect your price. If you don't want to make cash sales, then you don't have to. But at least have some protection, because these markets don't have to go up. Even though it feels that way, and you look at this on a global perspective and a global scale, that does not mean these markets they have to remain bullish. Mm-hmm. We know the uncertainty out there with the geopolitical turmoil. We know the energy costs that are what they are. We need to be very, very cautious with that. But in the use of options, get to know them, understand them, ask questions about them, find out what they do and how how you can use those with your operation. It is a tool. It's a great tool to be using, and it's a way to define your risk. That's the big thing in a market volatility situation like we have.
So with that in mind, I want to turn to Jeremey and Kerry here for a minute. Yeah. And I guess my question to you is, a lot of folks are maybe not familiar with using options. Maybe they've never tried it before. But that's something where you guys can actually help out the producer to actually acquire these options, because it might take a little bit of money, but I always look at it as maybe like the equivalent of hail insurance or crop insurance or something. And that's something where like a bank system like what you guys work for can actually help them in that regard. You might explain that a little bit.
Yeah, I think you're 100% right. You know, on the banking side, it's probably more similar to farming than people realize. You know, we're all about trying to take risk off the table, and you know, the options, if done right, you know, through you guys and your expertise, can allow and help for that to be done, where you could take risk off the table, which in turn makes obviously us, as we're lending out our capital, you know, more comfortable with what your end game strategy, you know, or even your overall marketing strategy is. And so, you know, we typically sometimes hear where I think producers get hung up is the overall cost and how that fits into your budget, and whether there's enough capital overall to be able to make, you know, everybody happy with the dollars that are going out the door. But if we do this early in the planning phase, and we account for some of this type of stuff, and you look at it and say, hey, this is my overall budget, this is where my insurance guarantees are, these are where my APHs are, and we've got a pretty workable plan, and that allows for us to spend a little bit of money on the option side. You know, from the banking side, whether that's cash or whether that's on a separate hedge line or something that's built into your current operating line, I think we're on board and we're willing to fund that, as long as it's helping us get to that price point we want, or to take risk off the table.
So I think the big misconception is a lot of guys will buy an option, let's say maybe buy a put option or something like that, and they're disappointed if it doesn't pay off, because they do expire. They get less and less in value as the time gets closer to expiration. And they look at that as a big disappointment. But on the other hand, you have to treat it like a true hedge.
Yeah.
You know, not as a speculative transaction there. And there is a big difference, but you have to get people to understand that.
Yep.
Right?
Yep. I think in a lot of the times, if your option expires, that's a good thing if you've sold the cash, right?
That means you've gained on the cash
Yeah.
side. So
Right,
again,
right.
Yeah. It's a protection
Yeah.
that if the cash is down.
Yeah, you pay a set, you know, premium for it, and then you're locked in. You put a floor under the price, so you can sleep at night. You know, and again, if you know what your break even and you're above that, you're making money, and you got to be comfortable with making money. Put that floor on, and then again, if it does expire, like you said, worthless, you've probably gained on the cash side. So, you know, the thing we want to get away from is just putting, you know, grain in the bin and just, you know, setting on it, and you're actually speculating, hoping the price goes up. And again, that's it. You know, in this kind of volatile market, you know, that's a dangerous thing to be doing.
Yeah.
And our goal is just, you know, working with people like Allendale to help, you know, you guys put some risk management tools in place to protect that price for you, so to make sure you're making money on the farm and you're staying in business. So
Yeah, exactly. You have $7 corn, you have $14 soybeans, but if you put it away in the bin and don't do anything, it'll be gone. You'll lose
potentially.
Yeah.
Yeah.
I mean, you'll lose a good share of that unless you do something to lock it in.
Right.
And if you do things like option strategies, then you leave that upside open. You might be out of a premium, but you still might benefit on the plus side.
Yeah.
Greg, I might bring you into this since you work with this all the time. From what I hear, the big thing nowadays is to use option spreads, and that's where you guys specialize. You know, a lot of people say, well, I want to re-own my grain or do something like this, but the options are too expensive. But you have spread strategies where you can maybe buy a closer to the at-the-money strike, and then maybe sell one further out against it. It takes a little bit of money to do that, but you guys know how to do that to reduce the cost for everybody, right?
Yeah, absolutely. Well, so what you would try and do is maybe, you know, buy that put to cover your downside, and you could then come in and sell a call above the market and collect some premium, so that you're keeping yourself closer to the money. You don't have to put as much money initially out there, because you're going to collect a little bit on it. But what that also is going to do is going to give you that opportunity that when the market does fall off, you're not sitting out there with the example of, let's say, a $6 put that's $1 out of the money right now. You're sitting maybe at a $6.70 put and maybe a sold call at $7.50 or $7.80. So you've got a little bit of cushion to the upside in case we do want to go and make new contract highs or something like that. But then once the market starts to back off, which it typically does at this time of the year, then you've got that downside covered, and you'll start to gain a little bit faster, and you've kept yourself that much closer. So now you know, okay, well, I spent 15 cents on this spread option where I bought the put and I sold the call. Well, that spread option at $6.70, with that 15 cents you spent, you're now at $6.55 instead of buying a $6 put for 25 cents or something like that. Now you're at $5.75. So you're keeping yourself that much closer to the money. You've got that downside covered in case, something falls apart. We know that with like what Steve and Jeremy were talking about with the unknowns that are out there, the recession potential, all these other things, they cover your downside. You can also then, if the market does fall off, you feel like it hits a bottom, you could also sell a put to kind of collar that in and collect back. So then you bring your floor up a little bit more. So there's about 100 different ways you can do this. You can do it with buying a put just outright. You can buy the put and sell a call. You could just sell an outright call. A lot of times that's where the most risk comes in. So we talk about kind of managing that risk. You want to take that call and put it up far enough that you're not going to be at major risk, but you want to have it worth something that you can collect if you were to sell that put. So there's 100 different ways you can do it, but the best way to do those spreads is to make sure that with the options you're using, that you're not putting yourself so much at risk right up next to the to where the futures price is, that automatically you're paying into it.
All right. Now, Steve, you and I were talking yesterday about the fact that, now, I don't want to get too deep in the weeds here, but if you get into maybe deeper mechanics of options, you were talking about short-dated options that are available that can really cheapen them up. And a lot of people don't have a clue what that is. Just touch on that just for a second and explain that. And then you were talking, they have serial options too, I guess, right?
You know what? There's a lot of different flavors when it comes to options. And the biggest thing, and as Greg was mentioning, is that you need to be educated. You need to educate yourself. We're not in a market right now where you can just sit. You're not. And it's how much can I understand? How much can I learn? Farming, right? Everybody, there's meetings. You go out and you learn. You go to bank meetings. You go to whatever to educate yourself. This is something that you should be educated on as well. Not only is it just you're buying an option that's way down the line and out there in the future, CME Group has come up with different option expirations. So you can buy even a weekly option. With the volatility that we currently have, you want to see what happens for the week, you can. You can buy a weekly option. You have what's called a serial option, which is something that is a little bit shorter dated, but is based upon a futures that might be further out. So you've got a lot of different opportunities to get involved. A lot of what I'll hear is I'll call a customer and I don't want to pay that for an option. I don't want it. And it's that right there is actually what you probably should be doing. But in order to take that and you shorten it up and say, hey, instead of giving me 3 months, I might not want to wait 3 months. So to pay for that premium out there 3 months is a lot.
Right.
So if you were to go, hey, you know what, I can go and there's options that you can have that might only be a month out. So you can now pay less. That time value has now decayed. It is smaller. So instead of spending 25 cents, it might be only 15, maybe 12 cents to do it. And so there is a way to manage that kind of risk when you talk about options. And there's just a lot of different flavors when it comes to the timing of them. So educate yourself, get on board, understand what is out there that you have as far as an opportunity and something that fits their needs. That's really it.
And you bring up something that, Kerry and I and our ag team have talked about a lot. I'm sure you guys do too. And Marlin, I'm sure you would echo this, but you talk about them not wanting to spend that amount, but they should. We've created internally a little bit of a kind of a line size worksheet, and what we end up doing is we show in there your highest percentage of expenses. And a lot of the times what they like to talk about is, well, I don't want to spend that money on the option, or the rate, what happens if rates go up. And in all reality, they're wanting to spend a lot of time on something that's maybe 2 to 4% of their overall budget, where a majority of their budget's in that land cost, which, let's say it is what it is. Sometimes you can control it, sometimes you can't. But the next 3 biggest costs after that are fertilizer, seed, and chemicals. And so do we spend enough time on helping, like on your side of it, you say, hey, I'm going to spend a lot of time making sure I have enough revenue to cover those 3 highest costs. Or can I utilize, on the bank side, finance to cheapen up those 3 largest costs rather than haggling over the 2 smaller costs of the budget? And that's something that we've been trying to get people to frame up in the right mindset. And you're spot on and hit it perfectly with the options.
Now, truck it by. Let me ask you from an ag lender point of view. We were talking about locking in a profit with options or futures or cash contracting or something, but taking advantage of these high prices right now. So if you have a producer or a client of yours that can lock in these really high prices and lock it in for next year maybe, because we're all thinking ahead of 2023 already at this point, if you can lock in a level using whatever method to lock it in through the local elevator or options or what have you, that would give you the freedom to know if you're going to have enough money to pay a certain amount on like inputs like fertilizer or whatever, and you won't have to fret over that this fall and winter, right? You'll know how much you can afford to spend if you already know you're going to make X amount of dollars in between, right?
Yep, absolutely.
Yeah, it works with just helps solidify that budget for next year. Because again, most guys are going to be prepaying here in the next couple of months on their major inputs of seed, fertilizer, and chemicals, primarily for tax purposes probably this year, and that's fine. We're set up to do that. But again, you got those costs locked in. Now let's work on the revenue side and make sure you get some prices locked in to help offset those costs, and to make sure you got a profit for next year. So.
Yeah, I would say our I don't want to say we've got better customers than others, and so I want to preface it that way, but I would say that the people that are making the best return are people that know both sides of that coin,
right,
and are locking in both sides of that coin at the same time. They're not spending all the input money now, with hope on the horizon for the revenue side. They're locking in the revenue and spending the input, and they know their margin where they're at right now.
Do you think the way the farm economy is right now that it's going to have a big impact on like farmland prices, rental values heading into next year?
I think that's a great question, and I think another uncertainty, because I've looked at this, and from 2021 to 2022, I think land prices on a sales side of it are up about 23%, roughly.
Huge increase,
and on the rental market, land rents are up about 11% year over year. And, you would look at that and say, in that environment with rates going up, that it should really suppress land values. But I think that these high commodity prices, along with economies of scale and some investor money that's out there, has propped up that land value. And I would, as long as we see these, uncertainties and high commodity prices, I think land values are still going to go along for the ride. I don't think interest rates are going to have that much of a impact on it. And especially now we're seeing a little bit of inversion where the long-term money is a little bit cheaper than the short-term money as well. So I think when you look at all that, I think land is poised to still be pretty solid.
Yeah.
All right. One thing I did want to ask Steve and Greg here, geopolitical issues. That's going to throw a monkey wrench into all kinds of marketing plans as we move ahead into 2023, maybe beyond.
Yeah.
We've got South America looking at record production in Brazil for corn and soybeans.
Yep.
But it's the third year of La Nina. That could screw that up. We don't know. That's going to present all kinds of challenges here. We still have all kinds of volatility possible, right? Yep. Going into the winter and spring months here. So we need to be prepared for that somehow. That's going to have your work cut out for you now.
Yeah.
What do you do about that?
It's all about planning. I mean, we talk about it with our customers, when they're getting ready to work with the bank, and you've got to have a plan when you go to the bank looking to re-up your loan. We're doing the same thing. We're trying to look out and see, okay, we can't necessarily tell you what's going to happen with Russia and Ukraine. I mean, I don't think anybody can. I don't think they can. So we're kind of trying to say, okay, well, what if this happens? If this happens, is it going to be bearish, or is it going to be bullish like what we saw back in February and March where the markets went through the roof? So that's where we start to line ourselves up and say, we want to protect ourselves from worst case scenario. It doesn't necessarily hurt the producer if the market goes up, if prices go up. So our whole job is to say, okay, well, how do we protect the downside? Because if we end up with a recession, which, if we go into and we continue with this inflation rate now, where does that take us? Because you've got down and you've got up, but there's already wheels in motion that you've already seen the Dow and the S&P start to fall off, or you've seen crude oil have these wild swings. I mean, it's I think $8 in about 2 days here. So you've got that opinion of my whole thing, and I know Steve, when he talks to his customer, is it's all about let's cover the downside, because that's where our biggest risk is. Once the market goes down, we can't make it go back up. So we need to make sure that we have that downside covered. You know, they talk about putting corn or beans in the bin and just sitting on them. Well, that's not a plan. We need to make sure that we cover that price, because at this point, I mean, we're talking $7 corn, $13.50, $13.70 beans. These are good prices for us compared to where it was at when we bought the seed. This is a great time to be saying, hey, let's cover it. If you're going to sell it back out to July, cover it with a July option. If you're going to sell it in March after the first of the year, cover it with a March. Just try and gauge when you want to be selling that. If you're selling it all the way through from January 1st until, say, July 30th, okay, a little bit sell at a time. Maybe you go out into multiple months, but you can do like what we talked about with is buying the puts and maybe selling a call, or doing some sort of a three-way option to kind of collar that in. But there's always options out there to cover the downside. And then if you get far enough in the money, there's another option of rolling positions so that you can then take some of that money and put it back into your pocket and let it sit there.
Yeah.
So
Or make it work.
make it work. Yeah.
Well, I think you're roughly kind of talking about all this stuff. Is that and Kerry and I and our ag team will say the same thing. Is that have a plan, right?
That's it.
Have a plan of how you would handle certain situations. You can't take the geopolitical risk off the table. You can't predict it, but we may have a plan for if these three events happen, how we deal with it.
Exactly.
Yeah.
Yeah, Steve, I talk with analysts all week long, dozens of them, and there's a big debate. What if the geopolitical tensions in the Black Sea region escalate? What if they suck NATO into the whole thing? What if it goes beyond those borders into other countries and that sort of thing? What if it shuts down shipping lanes and what have you? A lot of folks are saying, well, they think that'll be ultra bullish for the market heading into next year.
Yeah.
I've heard of some really wild market stories about people buying option spreads like way out of the money just in case. But some think it'd be great for prices, and I'd say almost half of them say that, well, that means the market may collapse. Now, keep in mind, we're dealing with a recession here too, most likely. But what do you think the truth is here? I mean, I hear it from all sides right now.
Sure.
Just wanted to get your opinion on that. What if things really escalate?
Yeah. The only way I think that we're going to really get things to escalate like you're talking, right, where it we're just raging bullish, is that we need to see demand. We know what happened back in March, right? Russia comes in, starts bombing Ukraine, markets go crazy. Wheat market went limit for days, right? And you've got guys saying, oh man, we're going to do this again. I think we kind of learned from that, right? Because the market reacted, fund money, right? Big pools of money just pouring in. The problem was that we didn't sell anything. Export sales right now are behind. Corn, beans, and wheat. Just pick one. So if we're going to talk demand, if we're going to talk about markets just escalating and going crazy, it's going to have to be led by demand. Currently, we're harvesting, 14.5 billion bushel over the next couple of months of corn. You've got 4.5 billion bushel of beans that have to find a home over the next few months. So you're going to tell me that we're going to find a home for all this, but it's going to be raging bullish. I know that there's some, in the marketing world, they like to use hopium.
Yeah.
Right? Like there's some hope, right? And and it's got to go. But the thing is, though, is that it's a lot. So in order to get what you're saying and to get bullish, it's okay to be bullish, but we need to start off from the demand side. As you mentioned, South America, right? Record crop. They're planting a ton of hectares or acres. They're if they do have a good crop again, now what? We talk China. We talk about what they purchase. They've slowed down purchasing. So to kind of bring it full circle to talk about that Black Sea region, we know how much grain moves out of there, right? Everybody hears it, and there's all sorts of statistics that'll show you that.
Or how much did.
How much did, absolutely. But the thing is, though, is how much need do we have for it? When you take a look at global supply, because we're a global market now, our global supply still is not as tight as it has been. So we're going through those piles, right? And those piles are coming down. But do we start to see demand pick up? That's going to be the key. The wheat market can go crazy. Corn market could go crazy. It's really not a bean story, but it'll go along for the ride. But I think that's what people are looking for, and that's really what it is. So as Greg had mentioned, to take a look at these options, what it does is that it eliminates that risk. Have some protection. Who cares? If it goes up, better for the farmer. If it goes down, as Greg mentioned, we can't make that up anymore. And there's so many times my heart gets heavy because the market starts going down and you're like, I told you maybe, and work with your bank, work with your everybody that you can have that tool in the toolbox that you can start using.
Yep.
But the geopolitical stuff, it's going to happen. Volatility is here. It's not going away.
And that's the bottom line. You need to be in touch with these guys. Kerry and Jeremy and all their counterparts and colleagues can help you out because it's getting crunch time now.
Yep.
We're getting toward the end of the year, time to do end of the year planning and planning ahead for the next planning season. You can't do it too early now.
No.
There's too much at risk.
Yeah.
So anyway, I think that's the bottom line. That
Yeah.
you need to keep a line of communication open between the customers and yourself, right?
Yeah,
Absolutely.
And then, like Steve said, it's all about education. Again, if you're not familiar with some of these marketing tools that were mentioned here, you need to talk to somebody. Hook up with somebody at Allendale or some other marketing firm. But you got to have marketing as a member of your team on the farm. I mean, it's no different than a tax accountant or an attorney or a banker.
Yep.
So it's just another member of your team that makes you successful. So that's what we highly encourage our farmers to do.
I think the main thing is don't be afraid to ask for help, right?
Yeah.
Well, and we do
Right.
this stuff all the time. Jeremy and I have had a
Right.
long relationship where, I'll speak to his customers. We'll do a Zoom call, or I'll come out and speak directly
Yeah.
to them.
Good point.
And then we've had him on our own conferences a couple of times here in the last year, where he can talk to what he's seeing in the banking industry. So there are plenty of opportunities out there for every producer to come in and find out. It's just be willing to do it. Just find find a little bit of time, and you generally always get a free lunch out of it.
Yes.
And like you said, with technology now, it's easy to set up.
Yeah.
You can, from the comfort of their home, on the,
Yep.
or the kitchen table,
Yeah.
they could communicate with us and with a member of your team or whoever it is,
Absolutely.
and work out a strategies together. So great.
Well, all in all, I hope 2023 turns out to be as good a marketing year or better than what we had, but let's hope the challenges are not quite as much.
Yeah. Yeah.
So I wish you guys and all your producers all the best, and it was great to meet everybody, and
Absolutely.
Steve, Greg,
For
all
sure.
you guys, Jeremy,
Yeah.
Kerry.
Thank you.
Yeah.
Hopefully it's a great year, and keep in touch with all these guys, and you'll stay ahead.